Hi, Warriors. S&P's made a graveyard save yesterday. Okay, we'll see who believes in it and how much they could get out of it. April Fools. No, it did. We have some type of, the bulls have hope. But underneath, yesterday's low measures 4,900. Is that number familiar to you guys? How you doing, Ingmar? Ryan, Mike, Bran, how are you? Make sense of world events. Yesterday, people were saying, why is crude going up? There's no news. Well, how about B-1 bombers and aircraft carriers? John Hawkins, Blake, welcome back. Okay, let's take a look at things. Euro's a little weaker. Still think the dollar is, you have to sell dollar strength, buy weakness. Yen has really been orderly from the top it put in last Friday. Then we had this little bounce. Could we have another one here? Yes, but I had this black line drawn, trying to figure out why. Sometimes you have levels and they're important for a while and you leave them on the chart and then you forget about it. So I must have seen something here. Anyway, it did stop at this line. So what was there? Some highs, false breakouts, some kind of pivot. Uh, anyway, the yen still looks in gear. Yields still look in gear. Okay, they tried to hold them yesterday, on the verge of a breakdown now. TLT is marching along. That was more and more. This top call was just a corrective move to 88.5. That was actually the target. I know my friend Jim Walsh is looking for 96, so there's still some left here. Let's see. Why don't we cover the euro and start with Ryan? Okay, Ryan. So good morning to you, Mr.
Morning,
Flow
sir.
Show. How are you?
I'm all good. How are you?
Okay, how you slicing and dicing them, buddy?
And my slice and dice. I'm just having a quick look around. It looks like we've got a bit of yen buying going on, that's driving things early in this US session. We're seeing cable lower, euro lower. But if you look at all the crosses,
Yeah,
dollar yen's coming down as well. Euro yen's down. Pound yen's
yeah.
down. Aussie yen's down. So it looks like a bit of yen buying is driving everything else at the moment. Don't ask me why.
Do you have a view on the end? Do you think this was the end of a bear market rally and that new lows are ahead? The recent low that we had here was under 47. Are we on our way there?
I think under that your black line, 148.66, I've got a similar line at 83 or 85 or something, so close enough.
Okay.
Um, I think if we break under that, then we're undoing this uptrend that we've seen off of that 147 low.
Yeah.
If we hold it, we might just be expanding that uptrend.
Okay.
But yeah, if we break it under there, then we're probably heading back somewhere close to 147, if
Okay.
not that or more.
Okay. Someone's flat the euro right now, Ryan, and they go, uh, what should I do? Should I be waiting for a break? See if it takes this out first to get long, or should I just have a piece on because it may not even get there? Hello?
Uh, I don't know what happened to Ryan.
Oh, sorry, no, I was on mute. I was going to say,
Uh,
yeah, I think right here and now, I wouldn't do anything, but
okay.
you've got that support there around your 200. Is that the 200-day
Yeah.
moving average? Yeah,
Yeah.
and it's a level on its own, so you've got a level there if you wanted to lean on it, but you want to be careful because we're still in a bit of a downtrend off those highs. So if we break it, then it might be going a bit more than that. Otherwise, for the moment, it's still looking a bit of a seller into 108, 108.30.
Okay. Still, so I mean, that is a bias shift for you because you were, uh, you know, bullish. right?
Yeah,
So you probably still you still bullish, or can we actually get to maybe 106 halfway back? At first I didn't think that could happen, but
yeah. I'm
maybe,
still,
right?
yeah, I'm still bullish above 105,
Okay.
most
Yeah,
definitely.
right.
And we can't even really get a look at the 38.2 yet, let alone the 50. So, that's keeping the bullishness in play. So above your 200 DMA, it
Yeah.
keeps the momentum going. So, we could get a push back up to that 109.50 highs, and then you've got to decide what you want to do there, whether it's going to keep going or whether it's going to double top.
Yeah. Okay. Uh, Appreciate that. Any view on cable? I think if it got to the 200 day, it's actually a stronger formation, right?
Yeah,
28 and a half to 28 would be a buy zone. What do you think?
yeah. This one's like holding up a bit better than the euro, isn't it?
Yeah.
So yeah, if you get a break now, then yeah, you'd be looking at that 2,800 level as the next level to, if you wanted to try something and test the trend. Yeah, or else it needs to break that 130.
Okay. This is different than what's been going on for weeks. Aussie to be up with the rest of the dollar pairs down. I'm giving it a shot and risking a little bit under these lows. If it takes out these lows, and I think we will go to uh, new low, test these lows here again.
Yeah,
But the 62 level has a chance, I think, to hold. And there a RBA meeting this week?
it
It just
was
happened
last
last
night.
night.
Yeah,
Okay, so they can't, so the central banks can't hurt you on this position. That's good. So anyway, I'm trying it. It's been a while since I have. Just, notice things that, have been trending for a while. And the weak sister has been Aussie. And
yeah,
then it's like a light switch. You come in one day and you're looking at Euro and cable under pressure, and Aussie is stiff. I pay attention to things like that. And maybe you guys just kind of, start reading the markets a little bit, and it'll build your narrative by just what the market's doing. You don't have to build a narrative to make the market fit into it. Capiche?
yeah.
Warriors? Blake, how was your trip?
It was nice. It was actually a good chance for me to catch up with one of my buddies that I've known since fifth grade in elementary school. So we've known each
Wow,
other since
that's
we were 10 years old. And
I
I
have
got to
one of
spend,
those left.
hey,
That's
it's
pretty
nice.
amazing, isn't it?
Yeah, it's nice to have quality time with friends that you've had for years, and it was really nice. I was a third wheel because my wife was in Mississippi, looking at a school at Ole Miss with my youngest son. So it was just me as a third
Oh,
wheel with my buddy and his wife, basically. And
yeah,
so anyway, but it
yeah.
was
All
fun
right.
nonetheless. It was just a real quick trip to Mexico, and
Yeah,
all's good. But it was nice time wise because we all know that tomorrow is going to be a big deal, and
yeah.
it's obviously uh, uh, Liberation Day, if you will. And Dale, I'm gonna take over the charts if you don't mind, because I think we should probably talk about a few things at this stage. And I know you're gonna have great news. Is you're gonna have Peter Bookvar on today, which is awesome.
And
Um,
Blake, he did say he has to do a hard stop 20 minutes into it because he has a important call to make
got it.
or
Okay, so
receive.
we'll, we
Yeah.
we will be very prompt about making sure we wrap up here in time.
Okay.
Uh, a couple things.
Thank
You
you.
were talking about the euro. If you look at the euro basic technical analysis from this morning, we basically hit the 618 retracement at 107.80.
Hmm.
That was an intraday, and I'm with you, Dale. I'm buying dips. Matter of fact, if you're in the chat room, you can see where my average long is from this morning. Actually, that was approximately 4 minutes ago, is my second ad to my euro long this morning. So I'm buying this dip exactly the way you feel. Ryan may be a trader and he might be thinking something different, but I'm with you. Just kidding, Ryan. Just joking. But but the thing about the thing about the euro, I agree with you, Dale, is that this is a buying dip type of scenario. The problem that we have obviously is tomorrow and all these reciprocal tariffs and how's the market going to view that. What's also interesting is we didn't get that massive dollar buying unless I missed it somehow for the end of month, end of quarter. Ryan, did you see this massive dollar buying that was supposed to come through?
We have seen it over particularly the last couple of days of last week. We saw a little bit, probably leftovers yesterday that just went through. We saw dollar buying sort of in the run up, as you can see from that, those lows that we got yesterday, and it will just turn tail 10 minutes before the fix. But you need to expect maybe a bit more today because obviously it's the turn of the fiscal year for a lot of countries, particularly Japan. So you can get some sort of new month fix action going on as people reallocate. So no, don't think it's all over. Keep your eyes on the fix later.
All right, very good. And Dale, you mentioned something about you mentioned that you're bullish the Aussie while it's above 62 cents. You remember we've had this drawn out as a possible bear flag. Now we hadn't even gotten here last week. I mean, you have to imagine last week. I had only drawn this level thinking that, okay, if we're going to stop, we're going to stop on channel or flag support, which we ended up doing to a T. And I think, you could say, well, I'm going to risk below the 62 cents. You could really even tighten it if you wanted to and say, as long as it's above these lows from yesterday, if you wanted to, like I said, if you wanted to tighten up,
tight risk trades. That was part of the appeal of trying it, and the other part of the appeal was, it's acting stiff today, and I'm sure there are a lot of Aussie bears that have been they've been long everything else and short Aussie or short yen against it, right?
Yeah, I've had very little opinion about the Aussie other than my 2 cents is that it has not acted well with this. I know copper went up for all the reasons why it was going up, and now it's going to be a false breakout. We talked about as soon as April 2nd rolled around, this is the time you want to be short copper. But if it couldn't go up with copper, and then you have it. You have risk appetite that is strengthened. You had this big run up in the in the euro, and I know it's mostly euro related, not necessarily all dollar related. But if you're bullish the Aussie, you've had a little bit of a problem. Here's the other issue. Like I wouldn't want to short it necessarily. I think being long makes more sense because I happen to be more of a euro bull. I think the euro is going to eventually take out 110. So I think that's probably where Aussie traders are a little conflicted. It's like, I know it hasn't really done a whole lot, but at the same time, the euro still looks like we're in process after this very impulsive move.
I would think there'd be a lot of for all the litany of reasons that you just brought up, how it's been behaving, that more people are on the short side right now for that reason alone. I even remember someone saying that Michael Brown thought the Aussie was a good risk reward short. I think there are a lot of shorts here, and so there hasn't been a reason to get long Aussie. That's why I think it's going to work. Besides the technical areas, the sentiment, I think it's pretty negative on it.
And I mean, you look at like for example, like one of the other commodity currencies that I like to focus a lot on is this US dollar Norwegian krona, and you see how this thing is just trading super heavy. And I mean, it's flirting with, in my opinion, really key support because we start breaking through that level, and there's a lot of downside here, which would complement the Aussie going higher, the Kiwi going higher as well. So I do think that this is I see what you're talking about with the Aussie, even though I'm not long. You know, I see the appeal here. I really do.
And if
One
I
of the things
get stopped out next,
I'm sorry.
yeah, and if they take my 65 pip stop next,
Next, yeah, exactly. I thought you were saying Mex.
no,
No, yeah, yeah, next. I
next,
mean, yeah, that's the
yeah,
trades are like buses. You just wait for the next
yeah.
one to come around.
You get a
Um,
traffic ticket if you drive. I had a sales manager who said, "Well, Dale, you can't drive a taxi without getting a few tickets once in a while."
right, right, right. So, hey, I want to say just really quick. We tomorrow, you know, we're obviously we've got, uh, you know, the reciprocal tariff day known as Liberation Day. Apparently, you know, Trump has decided what he's going to do.
But
There
it's a
hasn't been a
secret.
lot of communication.
Yeah, secret.
So, you know, the market's going to be, I don't know how we're going to take this. I want to ask Ryan. Ryan, what are your thoughts here going into tomorrow? How should we be positioned? What are you thinking? And is there anything we should be looking at specifically?
Yeah, I'm going to take a leaf out of Dale's book. I think we should be positioned in our bunker with a tin hat on because it's going to be an absolute mess. We're getting all these reports. You know, when he took over, he said he was going to instruct his staff to make reports on each country and what they're up to and how they're giving it to the US. So we're going to get all those. He's going to list all the tariffs out, and you know what Trump's like. It's never going to be a straight, clear speech. He's going to be all over the place.
So,
So
how many friends does America have left after tomorrow? So we're being liberated from our friends
you've been liberated from
tomorrow,
yourself.
right?
Yeah, you've been liberated from your money. Yeah, so I don't know how to trade this. It's all going to happen at 3 o'clock tomorrow afternoon, which is 8 o'clock UK time. So it's going to be a funny time for the markets, and it's just going to be endless headlines. And then we're going to have to take time to pick over it, see if it's as bad as what we've been expecting, or it's worse, or whatever. And then we're going to have to wait until the next day when everyone decides to react to it and what Europe's going to do with it, what China's going to do with it, and take it from there. But yeah, positioning going in, toss a coin.
And I mean, you look at like the S&P, and the S&P, as you pointed out, the first thing this morning, Dale, we had a hella recovery from critical support. I mean,
Graveyard save. You know
yeah,
what a
I mean that was
graveyard save is?
I was impressed. I was driving, you know, I was actually driving home from Mexico yesterday, and we hit this, you know, major support at 5,500, and I saw us bounce. I mean, it's a 100 point bounce in the S&P. So it just shows you how important this level is, because if that breaks, I mean, we do have a bear flag pattern. It points to 5,100. So, you know, and I talked about that on the week ahead video. I said, ooh, I'm so sorry, guys. I'm still adjusting to getting up early, and I was on Mexico time for a couple of days. Didn't mean to yawn on you. Anyway, sorry if I just made you guys yawn. We talked about the importance of 5,500, and we basically probed it. So if that breaks, we are talking 5,100 would be an eventual target in the S&P. And you know, after the aggressive bounce that we saw yesterday, Dale, I mean, is that the line in the sand for you too? Is this 5,500? Do you go bullish? Do you get bullish here? What are you thinking?
I'm thinking that all that is I said earlier, it measures 4,900 to me, and whether we have a bounce or not, it's a really binary coin flip. I think that we could, because perhaps a lot of this is already priced in. There's been a lot of damage. So maybe it's going to be, sell the news and buy the fact. Maybe that's what we started to see yesterday. But you don't want to see it back down to 5,500 again, because I don't think it'll hold another retest. So
Yeah.
Agreed.
we could get a rally back to into mid-April, back around 58 and a half. If this holds, 5,900 into that. And then something else, then tariffs won't be the problem. maybe the retaliation will be the problem.
Yeah, maybe
How's that for a theory?
the reciprocal, the reciprocal.
I've just got a
Then we
couple of things.
shake out. I mean, the greedometer has been between extreme fear and fear for 3 months now. Okay, there is a, I'm not saying that the majority can't be right, but they've been right for a while. They could get squeezed for a week or two, just like we had at the last low, right? All it did was stabilize, right? So maybe the dollar is going to stabilize here too, because the market seems to hold up better if the dollar's not puking. So
Ryan,
that's
you were
what
going
I
to
think.
say something. What were your thoughts?
Yeah, just back
Oh yeah,
on the S&P. Just I've got two things that make it look bearish, particularly just now in the short term. The first thing, we made a new low. That's
yeah,
bearish. Even by a couple of pips,
yeah.
we cracked that prior low. If you want to see support, you want to see it holding above that level, by 10 pips, not ducking under it. Secondly, 56.20 is potentially a level today. 56.22-ish was the high I've got so far today, depending on what contract you're looking at. If we can't get above there and close above there today, we're probably going back through those lows.
So you're in other words, if we can't break back above this, we got to
Lower,
be
yeah,
looking
20s, 2022.
Okay,
Yeah, just where today's high is. Yeah,
right there,
yeah,
somewhere around those levels, and it depends what ETF or CFD or whatever you're
yeah.
looking at, but
Give or
you
take.
guys can get the drift there.
The Dow has been the strength and relative strength rankings. Now pull up the Dow chart. So see how much stronger that was, much higher low.
Yeah,
Okay, then
exactly.
the S&Ps, and then bringing up the rear, which has been taking the biggest hit, is Nasdaq. I'm not sure where
Yeah.
Russell fits in, but the Dow, and that is kind of a sign when people start buying the Dow and it leads. It's a little bit of a bearish bet because they all want to be in big, the large caps. All right, so the Dow could lead us back for another bear market rally into April. That's what I'm thinking.
Well, I think it's gonna be a really, really interesting market over the next couple of days. That's for sure. And I'm excited that we're all gonna have the opportunity to trade around it. And so Nuno just asked, what time is the announcement? And Ryan, based on what you've heard, again, this is me, just coming back into town. It's 3 p.m. tomorrow
Yeah,
Eastern, correct?
Oh yeah,
yep, in the
Russell
rose
looks
garden.
worse.
Yeah. So
So we
yeah,
have two drives to a bottom in Russell right now.
yeah, Russell does look like it does look like crap. Yeah, it
Yeah.
definitely does. All right. So the next question is, you look at gold, and gold continues just to grind up onto this channel. I mean, look, I mean, we're at
Confirmed high.
3167 and channel resistance, but do you really want to stand in front of it? What do you think here?
I'm in Newmont puts.
How many channels have you had in the rally so far?
Well, this is the bigger one, and this is the one
Yeah,
that we drew last week. So this blue one is one we drew last week on this show.
yeah, and it
So
keeps kicking out. It keeps
yeah,
kicking
it
out.
keeps it's an acceleration phase, as we've been talking about. It's accelerating higher, and when you start once you start breaking through these channels, then it becomes an acceleration, or you could say blow off top. It's hard to imagine gold going into a blow off top scenario, but I mean, why shouldn't it? And why
Yeah,
couldn't it?
it's
It
possible.
is.
We've had
Yeah.
Asian buying again overnight. This is the fourth day running now, I
Okay.
think. Yeah, Thursday, Friday. Yeah, fourth day running. We've had buying roughly the same time period over Asia, and then you get Europe coming in and having to play catch up, and that's what takes it off again. So we've had this before, and it ran for quite a long period. So just keep an eye on that if you're in gold, particularly if you're trying to fight the trend and short every high.
Yeah, right. That's great point. Great point, Ryan. Now I want to ask you really quick because we did have some economic data out last night, and it seems like this is really well, I'm sure there's a multitude of things too with tariffs coming tomorrow, Liberation Day, people wanting to position themselves long dollars going into that. But we saw a lot of PMIs come out overnight, and as you can see clearly on your screen here, a lot of red data. So was this the data? Was this what drove the euro lower in your view? Because you were awake and watching the markets, while Dale and we were snoozing. What are your thoughts here regarding all this data that's come out?
No, because they were all final numbers. So even though they missed expectations, which are usually what the flash number was anyway, if you look at most of them, they're up on last month anyway. So, Italy wasn't, but if you look at France, it missed expectation, but it was still higher than last month. So it's not a real red, if you know what I mean. But they're all still in contraction. So they're just less shit than they were last week.
Got it. Okay. And let's not forget that I know everybody is focused on what's going to happen tomorrow, but we also have a jobs week. I mean, this is like jobs data week, and we have even today we have ISM manufacturing coming up in about an hour and a half. We have JOLTS data coming out in an hour and a half. So there is data that could really move the market today. Aside from, I know everybody's waiting for tomorrow, but we will have ADP. We're going to cover that live tomorrow here on the F.A.C.E show. So make sure you guys are around for that. So there's going to be a lot of stuff and a lot of moving parts. So let's before I pass it back over to Dale, so he can have a great interview with Peter. Let's talk about what you guys are looking at. I'll tell you guys what I'm looking at for the week. So let's start with you, Dale. What are you focused on this week with everything that you're seeing?
Well, I think that last week was decisive in yields for lower yields, lower U.S. dollar yen. I believe all dollar rallies are meant to be sold. So buy dips in euro and cable and maybe now Aussie. And, you know, I'm going to stick to it until they prove me wrong.
All right, I'm with you. And this head and shoulder chart really is taking form. Quite nice,
Yeah.
actually.
Yeah.
And so a breakdown in yields would definitely complement and give us that weaker dollar. So I like it, Dale. Now, as far as precious metals going, are you doing anything with precious metals here?
Yeah. I bought some Newmont puts yesterday.
Oh, really?
Yeah. So, I did a relative strength study and see Newmont, it's hard to believe that it's a miner, doesn't it? I mean, compared to GDX, and GDX is diverging unlike the physical gold market. And so the relative weakness in miners has been Newmont. So I figure if I'm early, it'll be more forgiving to me than GDX would be. So bought some June 42 and a halfs for 90 cents.
Oh, great. That's
Let's see what
awesome.
happens. Yeah.
Yeah, no, I think that's a decent play. All right, I like it. Ryan, how about you? We got a couple minutes before we got to pass it over to Dale.
He's
What
like
are your thoughts?
Goldfinger now. He's Goldfinger, Ryan Goldfinger. He loves only gold.
Yeah,
Yeah.
I'm still slicing and dicing. It's going very nicely. Thank you very much.
Yeah.
Looking for that just to see where it keeps going. But other than that, yeah, I'm going to be looking at
32.50.
this tariff stuff more for an after reaction trade. Going to keep an eye on dollar CAD and dollar MEX,
Yeah.
particularly dollar MEX if we get up towards some of those prior highs, 2080, 21s, that sort of thing. If the news isn't that bad, then I
Excellent.
might think about shorts again. Well, I'm still short, but I'll probably get knocked out on the way up.
Yeah, this dollar mix, as you guys can see, this nice little harmonic pattern has developed, and I'm with you. I think if you get an opportunity to short it at 2080, that's a great place. And what's really been interesting, I'm glad you brought this up, is the dollar CAD broke that, descending trend line, this wedge that we had been discussing. And I'm surprised. Well, I'm not. I'm surprised it broke out ahead of tomorrow. That's what I was surprised about. More surprised about that. And I'm gonna, I know Dale. He has his interview right now, so I'm gonna pass it over to Dale. But I'm gonna stay with you, Dale. I'm buying the euro against the 618. I'm scalping a lot these days, but I am going to be reacting to the reaction tomorrow following Liberation Day. So that's what I'll be looking for as we go into tomorrow. So you guys, best place to be is in the Forex Analytics chat room. Remember, it's only $1 for 10 days to come sit in the chat room with us. So if you wanted to know, that I was buying the euro before the show, or actually as we were doing this show, I picked up my second piece on the long side. You can find out, what I'm doing, what Ryan's doing, what we're trading. K-Man's very active. He'll be back later on this week. And also check out the trader funding program, especially for those of you that want access to large amounts of capital. Check that out. So Dale, do you see Peter?
Yeah, Peter, please accept the promotion. You could resign after the 20 minutes. There you go. All
All
right,
right,
so
there he is. There
we're
he is.
ready to go.
All right, you guys have a great interview. I'll be listening in. Peter, welcome to the show, and Dale, it's all yours, buddy.
All right, thank you, Blake. Ryan,
Thanks,
again,
mate.
nice opening, priming people. Peter, great to have you before Liberation Day.
Thank you,
How are
Dale.
you?
Good. How are you?
Good. God, I mean, the whole world's changed since you and I talked 3 months ago or so. I feel like we're in a parallel universe now. Tell me what's top of mind for you. And I have some important questions to ask you regarding foreign markets because you were way ahead, even had to probably go through some pain by going into emerging markets and foreign markets before it became fashionable as the dollar decline accelerated. But with these tariffs, what are your expectations? No one knows what to do. Everyone's jockeying, or I'm kind of in favor of really almost being flat, the markets. What are your expectations for tomorrow and going forward?
Well, I think it's important to understand that tariffs are being used in or threatened in a multitude of ways. And with tomorrow, I'm not sure sort of which tariff door he picks.
I
Uh,
see. Okay.
one use we saw it with the threatened tariffs on Canada and Mexico for geopolitical, non-economic reasons, close up your borders. We have one use of tariffs, which is trying to protect U.S. industries like steel and aluminum. Then another tariff use is to try to encourage domestic production. Another tariff use is reciprocity, of course, which I'm hoping the focus tomorrow is more on, that the net result could be a global reduction in tariffs in the aggregate. And then the fifth reason, which is what I fear the most, is they're just going to use it as a piggy bank in order to pay for the extension of the expiring tax cuts, and that the number bandied about of a 20% across the board tariff on goods imports, which is about $3 trillion-ish, which would yield about $600 billion, because they think that's going to cut the budget deficit relative to GDP. That's the one that I think would potentially be most harmful. If there's one thing we learned over decades is you can have tax rates that are high, you can have tax rates that are low, but the government tends to collect about 17% of tax revenue as a percent of GDP. It's the spending side that is completely off sides, where historically it's call it 19 to 20% of GDP, and right now it's at about 24% of GDP, hence the near 7% budget deficit relative to GDP. So I don't know if tomorrow is a reciprocal day
Yeah.
or let's raise a bunch of money day, or a combination of both.
Okay.
That's the
Okay.
question, and no one knows.
Yeah, it's all uncertainty. So
Except Trump.
let's talk about what I think might be a change of regime. I would say maybe about 5 months ago, people would have had a hard time imagining a weak dollar not being supportive of risk. And you and I talked about it when the dollar was peaking that dollars could be repatriated, that there were other markets that were more attractive, that weren't as overvalued as the US. Have we now entered a new regime where a weak dollar is now risk off?
Well, the weak dollar is a reflection or sort of a symptom of foreign risk off in U.S. assets.
Right.
The game-changing event this year was the DeepSeek news. And just to back up
Okay.
for a second, U.S. Mag 7 stocks basically became a reserve holdings for foreigners
The
and some foreign
Chinese
central
mainly?
banks.
The
No,
Chinese? No,
no, no,
just
no.
that. Okay.
Okay, so foreigners owned U.S. treasuries, they own U.S. assets, they own some U.S. stocks, but Mag 7 became a major component of that reserve basket. If you look at, as of December 31st, the investment arm of the Norwegian Central Bank
Okay.
was the 10th largest shareholder of NVIDIA. They owned 324 million shares of NVIDIA. The Swiss National Bank, as of December 31st, owned 90 million shares of NVIDIA. And they own Microsoft, and they own Apple, and they own Amazon, and they own Meta, and they own Tesla, et cetera,
They
et
own
cetera.
them all.
So, and it wasn't just those two central banks, it was central banks around the world and also other foreign holders, to the point where if you include preferred stocks, closed-end funds, mutual funds, stocks, foreigners own about $17 trillion of US equities. So when DeepSeek news came out, it sort of sealed the fate of this Mag 7 trade that was already on shaky legs because investors started to question the viability and the return potential of all this AI spend.
Right.
So what we've seen is as foreigners have cut back their holdings of Mag 7 stocks, the dollar has weakened too. You can draw a correlation chart of
Yeah,
the
an
Mag 7
overlay.
index and the US dollar index, and they
Right.
pretty much mimic each other both up and down over the past year. So the dollar
Okay.
weakness is an outgrowth of foreigners that are trimming back on US assets, and some of that money is finding a home in gold.
Okay. Well, I mean, where else, Peter? I mean, that's the obvious. Okay,
Well,
so they're not.
international markets as well. I mean, look at the
Okay.
German DAX, look at the
Yeah,
Hang
the
Seng,
deck.
look at
Yeah,
other markets.
China. Yeah.
Yeah. So
Yeah. So do you think
investors
this
are
is a
finding other things to
secular
buy.
is this secular shift? I was reading that what's happening now, the shift from, the overweight, U.S. Tech stocks for years and the undervaluation of foreign markets, that this only happens every maybe 20 years. So, it's not late. It's really just beginning. Do you feel that way?
Yeah, this is a multi-year thing.
Okay.
There are also some other broader things that I think sort of add to this transition period that we're very much early in entering. When you look at the U.S. economy, the three major economic reasons for growth over the last couple of years has been excessive government spending and anything related to that, whether it's Medicare, Medicaid payments, defense, whether it's the IRA, whether it's the CHIPS Act, whether it's transfer payments. A 7% budget deficit to GDP is extremely stimulative. Also, anything related to AI spend and anything related to upper income spending, where upper income households have benefited from rising stock prices and
Yeah.
higher home prices. Well, if the administration's goal, which I laud, is to cut the pace of government spending increases and rein in our excessive debts and deficits, that in long term is a great thing, but in the short term, that's going to
Painful.
be hugely negative economically.
Yeah.
If the pace of AI spend, which is still very robust, starts to slow down in its rate of increase, which I think we're seeing signs of that sequentially in the last earnings reports from the big companies, and we'll see it again in a few weeks. Well, that's going to be obviously a big drag on CapEx because CapEx ex AI has been flatlining. And if this stock market continues to have shaky legs, you can be sure that upper income spending is not going to be able to maintain the same level of momentum. So there's some really big things going on here in terms of, as I use the word again, transition phases that I think everyone should be paying some very big attention to.
Okay. Uh, so I wanted to ask you about this. So, because we've had Mag 7 and NASDAQ sell off and more recession talk, and this would be a kind of a counter argument, the industrials held up great through this period. So, and it doesn't look like it would take much for the industrials to make new highs. So if we do have a recovery, and I call what the S&Ps did yesterday, Peter, a graveyard save. Do you know what that is, a graveyard save? You ever play pinball?
I have.
All right. So it's when the ball is going down into the middle of the hole, and you almost simultaneously flip your flippers, but there's a little time difference between it, and you save that ball from going down the hole,
Yeah,
and
I've
you
done that.
get to keep playing. Huh? You've done that?
Yeah,
All right. All right.
I'm a
So
Gen Xer. I played
all
pinball.
right, all right, graveyard save. So that's what I think the S&Ps were. These technically are real critical levels. So are we going to hold 5,500 and get a rally first because of maybe yields coming down? Could it support the market for a little while, or are yields only going to come down because they fear, it's a flight to quality and they fear a breakdown? Can they both rally together here now? TLT looks pretty good. Looks like it has some legs. What's your view on yields and the market here?
Big picture, long term, I'm bearish on yields. I think we're in a bond
Okay.
bear market with continuous rises, increases in long term rates. In the short
Okay.
term, yeah, obviously yields around the world are rallying, or I should say, are dropping. Bonds are rallying,
Look at
particularly
that
the last
10-year.
couple of days on recession worries.
So
But
we could have a growth scare in April or May
yeah, I mean, I think
because of what they're
we're in the
doing.
midst of it for
Yeah.
reasons I just stated, and then you throw in tariffs. But with tariffs and its impact on manufacturing's been in a recession for 2 years now. So
Yeah.
it's not like tariffs would put manufacturing into recession.
Is that why
It's
XLI
already
is
in a
holding up
recession.
so well?
Well, I mean, what's our experience when it comes to stocks? When you're buying stocks in a recession is a great time to buy. Buying stocks when things are great is usually a bad time to buy.
Right.
So
Right.
the industrial stocks, well, pre-tariffs have been sniffing out sort of the end of this manufacturing recession around the world. I mean,
Okay.
the PMIs around the world are trying to stabilize here around 50. This was pre-tariff. So there was a hope that, a 2 year recession was enough and it's time to buy these things. I think that's why, they've hung in as well as they have.
Yeah. Or they're going to get killed here. It looks like one way or the other here. So the dollar, Peter, still bearish dollar. Could we see like 112 euro before we see 105 again?
Well, in the face of all this tariff talk, where theoretically the dollar should be rallying against all currencies,
Okay.
really particularly we've been rallying against the Mexican peso and the Canadian dollar because that's where we know there's some specific tariffs. The Chinese yuan, where China now has 20% tariffs on top of them, on top of the tariffs that were put on in 2018. The yuan has sort of been
Yeah.
little changed here. So that's what's most interesting here. And let's just say, we slap tariffs on the euro. The euro has been rallying because of hopes that fiscal spending in Europe, particularly in Germany, are going to jumpstart economies there. And also getting to our discussion earlier about foreign flows finding a home outside the US. That's one of the problems here with tariffs. If the dollar doesn't rally across the board, if we throw in blanket tariffs across the world and the dollar doesn't rally, that means that the US consumer is going to, and the US manufacturer is going to eat most of these tariffs. We need the dollar to rally in a way to mitigate the tariffs if this
Right.
is what we're going to
But,
do. So,
but that's not what the administration wants. They
well,
still
the
want a weak dollar
administration,
on
well,
top
maybe
of it.
over time they do, but that's the inherent conflict with some of these policies.
Okay. All right. So I know you have a very important meeting to make, Peter. So here we are, beginning of the second quarter. Uh, where do you think the opportunities are, quick, and the major risk? Do you think that we're going to break down in the market and trade back down, I don't know, S&P 5,000 to 4,900, something like that?
I
Or
mean, I
or
think, I'm sorry, go ahead.
no, go ahead, because I've never this would be the first top where you've had the greedometer in fear mode for over 3 months. So it's not like there was any euphoria at the top. So are just sentiment wise, are people too bearish right now?
I have no idea where market's going to go in the next couple of weeks, in the next couple of months.
Okay.
I
All
do
right.
know that if the S&P 500 is going to lose the leadership of 35% of the index of the mag being the Mag 7,
Yeah.
the risks are clearly to the downside because I
Okay.
don't know what group is going to take the baton and somehow save the day. Yeah, we'll
There
get
isn't there isn't anything. Look, they led the way up. They're going to lead the way down.
exactly. So that's the risk to the market is we're losing its leadership. And that's the
Sponsorship.
broader risk. Yes.
Yeah.
Are there opportunities in other parts of the market? Yes, for sure. But speaking of the S&P, if you lose 35% of the index, the risks are clearly to the downside.
All right, Peter. Really appreciate it. Hope you and your subscribers and all the people that listen to you, they're smart that they listen to you, and appreciate you coming here every 3 months and sharing your view. I think we got a lot more input from you doing these than you can do on like a quick TV interview. So thank you. And I encourage people to not only follow Peter, but to go to his website and check out his Substack and keep in touch and at least get the free email so that you're aware. He gives a great review of the highlights of the day. Then at the end of the week, a succinct wrap up of all those things. So if you're not reading Peter Bookvar, you're missing out. That's my view, buddy.
Thank you, Dale. Appreciate it.
All
Thanks for
right,
having
bud.
me on.
All right,
Okay,
I'll
take care.
see you next quarter, bro.
Sounds good. Thanks.
All right, that's a wrap, everyone. Have a great rest of the day. Get some sleep, and you know, I'm not afraid of no tariffs. Are you? I'm not afraid. Who's afraid? Anyone? I don't know. Why be afraid? Okay. Anyway, we shouldn't be. Don't just count your tariffs, count your blessings. See you guys tomorrow. Adios. Thank you, everyone. Get into the community. You 200 left in here. Now where are you going to go? Should be going into the chat room. Open your credit card, and if you haven't tried it, send a buck. I'll guarantee that buck. I'll send you a refund. Huh? All right, Donna, take it easy. All right, Donna's afraid. All right. Well, you know what? If you're worried and you can't sleep, just count your blessings instead of sheep, and you'll fall asleep counting your blessings. All right. Everyone more relaxed now? Uh, yeah. Don't forget to pick up my CD, The Trading Minstrel. Adios. Thanks.